We're going to do a review of how not to basically play the markets. The headlines, you've got a number of slides here. 4 mistakes preventing consistent gains in your trading business.
Well, yes, I've been looking at both retail and institutional accounts pretty much since 1999. And in that, I've noticed 4 mistakes that traders at both retail and institutional level make over and over and over again. And in our training at VectorVest, we like to make investors stroke traders aware of those, so hopefully they can actually get around them in their own trading.
Understood. But is it that easy?
I think if you're aware of them, certainly, it's reasonably easy to actually change your performance, and most people are not aware of them, and I know traders who've been making the same simple mistakes for the last 30 years and wonder why their performance is poor and inconsistent. Very easy to make an awful lot of money in the stock market, quite difficult to keep hold of it.
Yep, okay. I know that feeling. Okay, so let's move swiftly on. You think of money first.
Well, yes, and we certainly go into the investing stroke trading business to make money, but if you think of a professional who's good at their job, for example, the best dentist in your area, that dentist has a full waiting room and has got a very successful business because they focus on perfect execution of each and every root canal, for example. And similarly in trading, stroke investing, the traders should think about perfect execution of each and every trade according to their own little trading plan. If they focus on perfect execution of each and every trade, then the cash will take care of itself. So my job as a trader is to make the very best possible trades and not allow my mind to move into the past where I've stuffed up before, or my mind move into the future where I might stuff up in the future, to focus and keep our mind in this moment. And if you think that anybody who's very good at their job, they do the same thing. I think it was Wayne Rooney who said that penalties are never a formality. So when the difference between a good golfer and a Sunday morning hacker is a good golfer focuses on perfect execution of each and every stroke. They don't allow stuffing up in the third last Sunday to affect them stuffing up in the third this Sunday.
Which again is me. Okay, well, let's talk about the emotions, emotional trades.
Well, yes, when you allow your mind to move to the past or move to the future, my engineer's definition of emotion is that it's your body's reaction to a thought. And when you become emotional, it's very easy to make really, really, really bad decisions. And we see it every morning driving. In the next slide, I've got a picture of a young fella. I saw somebody like that this morning in Notting Hill, for example. And you've got to sort of say to yourself, what is the quality of the decisions that this chap is making now compared to the quality of decisions that he would make if he was sitting in his armchair, relaxed at home. So very easy to become emotional. And in years gone past, I did a 3-day seminar on trading psychology, mostly to institutions. And I spent 1 full day on showing traders how to keep their mind in the present moment so they didn't become emotional. And it was well received.
Easier said than done, as always. Okay, so in terms of buy stocks going down, averaging in the wrong way?
Well, yes, I think that the old 2 for the price of 1 has bankrupted more traders than anything else in history. And we've just got to look at Carillion and dozens of other opportunities in Germany and South Africa. There's a company called Steinhoff, and in South Africa it fell from 100 Rand, I think, to 2 Rand on the way down. My son's a stockbroker in Johannesburg, and he has a big client who bought quite a few at 12. Thought he'd found the bottom.
Well, we've all done that.
As Livermore says in Reminiscences of a Stock Operator, I've never seen a share too high not to go higher and too low not to go lower. So buying stocks that are going down. Pound cost averaging may work with exchange traded funds, it may work with a fund, but in individual stocks, sooner or later you're going to hit that big one. Marconi, for example, fell from £13 to a few pence. And that will, there's 2 types of capital moves. One is the cash, and 2 is your emotional capital. And if you do something like that, then that can really knock your emotional capital for 6.
Okay, let's talk about losers.
Well, holding on to losers too long. When I started trading in October 1982, and I had a really good run to 1984. In 1984, I was now somewhat of a guru. I'd read all the books, I'd been to courses.
Dangerous.
Yes, and I bought into one share, and the darn thing kept going the other way. And of course, I held on to it, and I held on to it, and I held on to it, and pretty much I gave up all the money that I made in the previous 2 years. So holding on to losers too long. Now, there's two aspects to holding on to losers too long. One is the opportunity cost of the cash, and two, every time you open up your trading account, there's red. And that red pretty much reinforces the belief that you're no bloody good at this.
Yep.
So that's holding on to losers too long. It took me a long time to find that slide.
Okay, so let's move on to the next slide. You ignore market direction. This is the key for me. Stocks go up in a bull market, stocks go down in a bear market.
That's right. There's a really good time to be in the stock market, and there's an awful time to be in the stock market. And I don't care what your market timing system is. It could be moving averages in the FTSE 100 or the S&P 500. But I think that you need to have a good idea as to when the general market is rising or whether the general market is falling. Everything follows from that. And at VectorVest we have a set of market timing, objective market timing systems for long-term position traders and for short-term swing traders. Whatever system you use, I think you really need to know what the market is doing at the moment. And certainly over the last few years, we've been blessed with a market that's been rising and rising very nicely, and I think there's more upside to it. The next slide, which, well, that's buy and hold. Buy and hold's a great place to be if you've got 21 years to wait. Goes up like a roller coaster, very slow, and comes down like a roller coaster if you've ever been into it. So that's our market timing system over the last couple of years, and at the moment the short-term trend of the London market is up, the longer-term trend of the London market is up, and all is good. I see it's up another 30 points this morning, and the American market sitting within a triangle. It's also in an up, moving towards the end of a symmetrical triangle, the S&P 500, and I would expect a decision to be made by the American market relatively soon. Technicals say that there's more legs to the upside. At least my technicals say there's more legs to the upside. So I'm reasonably positive for a move upwards over the next few weeks, few months.
Okay, so let's go to the next slide in terms of worry-free investing performance. So this is a back test of...
This is our most conservative trading plan.
Yeah.
And we call it worry-free trading. In worry-free trading, we sort all the shares in the London market by our proprietary measure relative safety, which brings those shares with the best track record of making money, where all the financial ratios are getting better, to the top of the pile. And anybody can, on VectorVest, can reproduce this, and we've turned £250,000 into, I can hardly see it, £250,000 since 2009, which is a compounded rate of return of 19% a year.
Okay.
In VectorVest, we offer a 30-day trial of VectorVest. Anybody can reproduce that on VectorVest.
Okay, so wrapping up, if anyone got any questions for you?
Well, yes, david.paul@vectorvest.com. Go to the website, vectorvest.co.uk. We've got quite a few webcasts that I'll be doing during the course of May. And anybody who wants to come along to those, listen to those, and just give me a shout, david.paul@vectorvest.com.
David, as always, thank you very much.
Thank you, Mus.
For those wise words, you sounded just like Jesse Livermore.